Welcome to the Deals Behind the Money. I'm Mary Kathleen Flynn, and I'm here talking with Andrew Lowinger, who's the CEO of DMC Capital Funding. And this is a new private equity firm that you've established recently. Tell us what it's about.
Well, with our experience in the retail and developing growth companies, we decided that this is a unique opportunity now when the economy is in such dire straits to focus our attention on a segment of the economy that needs money, needs capital badly, but not in the way that we've traditionally read about in the newspapers. We're not talking about an ailing company that needs a bailout. We're talking about a company and companies in a segment of the industry that's actually doing very well, and under normal circumstances would have access to capital and would be able to grow and prosper.
The Consumer Electronics Show is in Las Vegas this week. I imagine the mood is going to be a bit, but what would you say?
Well, it's going to be reflective and somber, I would say. It's been a tough Christmas. It's been a tough year. And there's nothing as causes as much concern as not knowing what the future is going to be, and the future looks difficult right now. We're going to be there with an upbeat message, and that message is that companies can prosper in a down economy if the plan is right, if they take advantage of the assets we bring to the table, which is the capital availability and the supply chain management and the expertise in cost efficiencies that we can bring. We can make companies, particularly those that are in the $30 million to $100 million area and want to grow, we can show them how to grow during a difficult economy. And that's why we're there at the CE show to get this message across.
Okay, very briefly, pretend I'm one of those companies that you want to work with. What's your expertise? Give me the highlights of your career that's going to make me want to work with you.
I myself have developed companies, I hate to say it, for about 35 plus years. Back in the 70s, we took advantage of the semiconductor revolution to introduce digital time products as well as electronic calculating products. In the 70s was a very dismal period.
I remember.
And we grew our company Unisonic Products from like 30 or 40 million to 300 million in about 4 or 5 years. We entered in the 80s the telecom industry when deregulation started, and we were one of the largest distributors of telecom products, eventually becoming the exclusive distributor of Bell South, a Fortune 50 company. And again, during the early 90s, which was a recessionary period, we grew that business to a $500 million business. So we understand that there are opportunities even during difficult times. You have to simply focus your attention on what the economy needs and what your company can do to fill a niche, and you can be successful. Of course, you can't do it without capital, and that's one of the things.
That's one of the ways you step in.
That's correct. There's no replacement for capital.
Before we let you go, can you just comment on what you see as your outlook for retail? Because, you know, with consumers facing layoffs, pay cuts, a lot of people seem to be in a paralysis when it comes to buying.
Well, retail obviously will face the problems that you mentioned, but I think that retailers that are innovative and who understand that even in a down economy, there are products and there are technologies that appeal. If someone is not going to spend $300 for a Christmas gift, he might spend $100. So what you need to do is to make sure you've got the $100 gifts out there. If he's not going to spend $100, he's going to spend $30. You need to make sure you've got the things that count to them. So I think most of the retail industry is pretty savvy about this, and I think that they will adjust. It will be difficult times. Our group of companies that we're looking at have a relatively small market share at this particular time, and we believe that they can be immune to the overall market situations. When you have 20, 30, 40% market share, obviously, no matter what you do, you're going to be affected by the overall downturn. If you've got single-digit market share and you're in the middle of that growth process, you can focus your attention on what you need to do, find your niche, and you can grow even during a down economy.
And nowhere to go but up when you've got small market share to begin with.
That's correct.
All right, thank you very much, Andrew Lowinger from DMC Capital Funding. And thank you for watching The Deals Behind the Money. I'm Mary Kathleen Flynn.